invests in companies that tend to be monopolies or near monopolies in their sectors, things that we all need.
It's highly diversified.
One of the great story in the last 60 years.
The longer you invest, compounding just does all the work for you.
Warren Buffett always attributes his success to everybody else.
Always been praising people when they deserve the praise.
He doesn't invest in things he doesn't understand.
The winner's investment he had was 12 investments, but majority of the 12 came from only 4.
But what people sometimes forget is
When you get to a stage, it becomes difficult to make an investment.
the main point of today's discussion is, should you be investing in Berkshire Hathaway now?
Welcome to the latest episode of the Intelligent Wealth Podcast. And with me today, as usual, Awet Gourmet, Head of Research at Minerva Money Management, and Carl Roberts, who is my fellow director in the very same fund management company. Welcome today, guys. The purpose of the Intelligent Wealth Podcast is to help inform serious investors about companies and markets and sectors to help them in their own decision making. We're not here to give advice. We're just expressing our own opinions. So obviously, you can't rely on this. Prices do rise and fall. You may not get back the full amount you've invested. And whatever you do, I say this every time, don't follow recommendations of even great investors, because inevitably their situations are very different to yours. Personalities are very different to yours. Timescale is different. So if you follow them, invariably it goes wrong. Always do your own research, but certainly use anything we discussed today to help you in making that final decision. So we're going to dive straight in to something that's fairly topical at the moment, which is Berkshire Hathaway. At the day of discussing this subject in this podcast, it's the 28th of May, which is only shortly after Warren Buffett last weekend announced that he was stepping down as CEO of Berkshire Hathaway after being the CEO for 60 years. Can you believe it? And handing over to his successor, Greg Abel, at the end of this year. But he's going to carry on as chairman. After all, he's only 94. I mean, give the guy a chance. We're going to dive deeply into Berkshire Hathaway today, this amazing conglomerate business that invests in companies that tend to be monopolies or near monopolies in their sectors. A lot of it is based on issues like insurance, rail transportation, utilities and energy, manufacturing, retail, etc. But they tend to be things that we all need. In many ways, it's an old-fashioned type of business, but it's huge and it's hugely profitable and hugely successful. So that's my little intro into this. So I guess the best starting point, if we're going to dig deeply into Berkshire Hathaway, would be our own head of research, Awet Gourmet, who's the expert in all this. So what are your thoughts about Berkshire Hathaway as an investment there, Awet?
Yeah, Berkshire Hathaway has been one of the great story in the last 60 years. I mean, Warren Buffett, the founder and owner of Berkshire Hathaway, has been, to many, like person like me personally, an idol. I mean, someone we look up to learn from, because first, when you come to investment, the first thing you learn is about investment. You go to Warren Buffett and you find his material, and you learn a lot about his long-term thinking, rationality, and discipline and patience. So the company has, over time attracted so many followers, and we can see recently the annual Berkshire Hathaway meeting, and over time has been great influence over the world, investment world. So it's been an example people to follow. A lot of companies emerge out of Berkshire way to mirror and to mimic what Warren Buffett has done.
Yeah. What are your thoughts, Carl?
Yeah, I think the thing to say about Warren Buffett is just his dedication to investing over all these years. I think it's incredible, isn't it? He's not someone that, he's a very wealthy guy, one of the richest people in the world, but he's lived a life that's almost quite frugal, really, compared to most other kind of billionaires. And he just seems to have a genuine love for businesses, reading financial accounts and investing, and setting up businesses and making other managers have all the support and things they need. Yeah, I think that just genuinely comes across. I mean, we've been to the Berkshire Hathaway annual shareholders meeting a couple of years ago, and just sort of the love in the room for that guy is incredible, isn't it? What other CEO gets a standing ovation from a stadium full of people. And how old was he? We saw him sort of a couple of years ago, wasn't it? So 92, maybe 93.
Yeah.
And he was there
93,
for
I think.
hours, wasn't he? Answering questions from all members of the public, which I don't think he was prepped for, because I think they genuinely were sort of picked out the audience, weren't they? And were asked questions. And he would sit there and he'd answer them, give really well thought out answers. So yeah, his stamina is incredible, really. So yeah, I mean, I think that's what I would say about Buffett. It's just his dedication to investing over a number of years.
Yeah, I think on the positive side, he's almost a godlike character. When we went to the meeting, which I actually think was last year in, wasn't it, Howard?
Yeah, it was last year. Yeah.
The point is this: he is a godlike character, and when you go to the Berkshire Hathaway meeting, I think every serious investor should at least go once. It is, in many respects, a pilgrimage. You go there not just to be at the meeting, but also to attend lots of other sub meetings, shall we say, with other great investors presenting and meeting up old friends who've got similar interests to you. That's what it's really about. It's not just about the shareholders meeting, although obviously that's very important. And I think what has been outstanding about Warren Buffett is that he's been a great teacher. He's had many, many famous sayings, very wise sayings, and he's taught us a lot. A lot of us have learned a huge amount from him, and a lot of the greatest investors in the world have used him as a role model. But what's interesting, I think, about Berkshire Hathaway and Warren Buffett is that they've been almost anti-capitalist. What I mean by that is that they've proven you don't have to be ruthless and nasty to get on. You can actually be a really nice person and a gentleman and totally honest your entire life and still make a fortune. And that's kind of turned things upside down quite a bit. That's quite unusual in this day and age. I'm not saying everyone else is not truthful or honest, but I think they've been extraordinarily good. And what Warren Buffett always does, he's incredibly modest as well. He always attributes his success to everybody else. For many years, it was Charlie Munger, his business partner, and he even says that his wife's more intelligent than him, and his team, Greg Abel, will do better than him when he succeeds him. So he always deflects praise. He never accepts it's got anything to do with him. And I find that quite nice. But apparently he learned how to behave and how to be likable from studying How to Win Friends and Influence People by Dale Carnegie. So he wasn't naturally that way. I don't know what he was like when he was younger. I doubt he was ever nasty, but he certainly improved a lot because his business partner for many years, Charlie Munger, had a reputation for being, how can we say, a bit blunt, publicly at least. Apparently behind the scenes he was quite kind, but he could be quite blunt. And whereas Warren Buffett has always been extremely polite to other people. So I do like that aspect of him.
Yeah, I think he does have this saying like criticize privately and praise publicly. I think that's why I think even
Yes.
if you listen to the recent shareholders annual meeting, he was praising Tim Cook for the best capital allocator. That even he said he made more money than himself he made for Berkshire Hathaway. So it's always been praising people when they deserve the praise. And one thing interesting I find from Berkshire Hathaway, Warren Buffett, is over his career, he made the winner's investment he had was 12 investment, but majority of his wealth came from only 4. So
Yes.
back again to like what we've been studying, most investment comes only from few extraordinary companies. And I think the key thing is just to go and find them. I think that's what we learn. When you find them, concentrate your investment and bet, invest heavily.
Yeah, I think, Carl, we were discussing before the podcast some interesting points about Berkshire Hathaway, about its performance, for example, against the S&P 500 in recent years. There's no doubt they've had a great track record long term. So what are your thoughts on that? What are your comments on that?
Yeah, so I think the main point of today's discussion is what we want to get across is, should you be investing in Berkshire Hathaway now? So going forward, because this podcast is for investors and we're trying to help you with your research. So, but if we just look at Berkshire's performance, if we go back 50 years, so, long, because obviously Buffett's been around, Berkshire's been around that long. So 50 years, the compound annual growth rate of the S&P 500 is around 10% over 50 years. Berkshire over 50 years, about 19.8. So yeah, over 50 years, you can't deny that Berkshire has been a massive outperformer of the S&P 500. But what you should also do, what people sometimes forget, is with the S&P 500, you should add dividend reinvesting into that performance figure, because Berkshire Hathaway don't tend to pay dividends. That they prefer to reinvest into the business, don't they? So they're reinvesting their kind of dividends. So you should do the same with the S&P 500. And when you do that, the performance starts to look a bit different. Now, over 25 years, it's still slightly up. So Berkshire Hathaway compound annual growth rate 9.7%, S&P 500 with those dividends reinvested 7.6. But then when you come into 10 years, so over the last 10 years, Berkshire Hathaway compounds at 10.9%. The S&P 500 with dividends reinvested is at 12. So Berkshire starts to underperform the S&P 500 over the last 10 years. And if we look at the last 5 years, Berkshire 12.1, S&P 13.2. So there's definitely a change between sort of the last 25 years and the last 10 years from Berkshire outperforming the S&P 500 to now underperforming it. So there's this myth, isn't there, that Berkshire outperforms the S&P 500. Yes, over 50 years, but that's because you're using all of that early kind of data from 70s, 80s, 90s. But once you start to come into the digital world, when things start to go digital, I think this is where Berkshire starts to miss some of its kind of growth targets and performance against the S&P 500.
Yeah, because even Warren Buffett, he said, when you get to a stage where Berkshire, 1 trillion, it becomes difficult to make an investment. Even like the cash holding, they have 348 billion in cash. Basically, the reason is they cannot find good, attractive investment to deploy the capital. But the good thing is, as you mentioned, Carl, and even moving forward, Berkshire Hathaway return is not going to be extraordinary. Like in the past, for example, you mentioned 19.8. But the one thing you learn is if you invested in Berkshire Hathaway 60 years ago, let's say 10,000, you will still have over $500 million. So that's extraordinary. 10,000 to, over 60 years to become over $500 million. That's an extraordinary story. I think an investor who invested in Buffett early on has done really, really well.
But I think the point on that, Howard, is that that's compounding in action, isn't it? That they always say like compounding is what the eighth wonder of the world, whatever the phrase is. Morgan Housel, a really famous kind of financial writer, puts it quite well in that he's saying Buffett is one of the most successful, Berkshire Hathaway is one of the most successful companies. It's been around the longest, because the longer you invest, compounding just does all the work for you.
Yes.
And you can see that because a lot of their successes are in the early days, and they've just relied on that compounding effect over time. So I think that you just got to understand that when you talk about Berkshire's performance over the long term, and you talk about some of these numbers, because it does sound great, turn 10,000 into hundreds of thousands or millions, but that's what compounding does.
Yes, and the other point you got to make there is what is £10,000 in today's money? It's going to be at least 100,000, if not a million. So it's a lot of money to have available 60 years ago. I'm going to say something a bit controversial today. I'm going to come up with some criticisms of Warren Buffett, which is rare because not many people dare criticize the god of investing. But I never really see any criticism of what sectors he invests in, and I find it quite frustrating. For example, investing in Coca-Cola, is that really a good investment? First of all, it's full of sugar. It ruins people's health. It creates a lot of obesity. Why isn't there criticism of that? And also, why Coca-Cola? Pepsi has performed far better stock market returns for the last 10, 15 years than Coca-Cola. Why be so, inflexible? I don't like some of these other companies he invests in. I don't like See's Candies. It's chocolate, very expensive chocolate and sweets. And I just think that's not a good investment. And fossil fuel companies, all kinds of things. So it's not as if he's actually that virtuous an investor, really. I shouldn't have to apologize for criticizing the god of investing, but you got to be objective about this, really. It's not all positive news.
Yeah, I think the reason he invested in those, I mean, if you look at Warren Buffett, every time he has a meeting, he's drinking cherry Coke. And he actually the way he see it is he loves it, and he just he tests things, and he tend to apply into investing as well. So he does eat like sweets, and he does drink cherry coke, and I think he managed to live until 94. And he, as an investment, I think we know as well, like when you test investment and you realize, some investment, it can be testable. For example, Apple, when he saw, everyone using Apple phone, and he realized the potential of Apple. And the same thing applies for Coca-Cola and See's candy. If you think about it, sugar is actually one of the most addictive. And he realized if he invests in it, and people always can consume it, and it's not going to change for the next 30, 40 years.
Yeah, but moving on to the theme that Carl said about Warren Buffett and Berkshire Hathaway missing the boat when it comes to technology. I know he's a controversial character, Elon Musk, but if you're talking about someone who's making a significant change to the way the world is growing and developing, I'd hold up Elon Musk as more of a well, dare we say, idol, not for everyone. Somebody the other day I was speaking to said he was evil, so certainly he's going to be more controversial, Elon Musk, and not as instantly likable as someone like Warren Buffett is, like your favorite grandfather sort of figure, But if you talk about someone who's going to make a significant change to the world, and someone who's far wealthier and far younger, then you got to look at someone like Elon Musk. So the only reason I'm throwing in some of these criticisms, not because I don't like Warren Buffett, I think he's amazing, but I do think we need to, how can we put it, be a bit more objective here and talk about the advantages and disadvantages of the company and of Warren Buffett. And I think he would probably agree with me, because he admits he doesn't invest in things he doesn't understand, which is fair enough, So I just thought it just puts it a bit more in context, I'd say, moving forward.
Yeah, I think you made a good point, Tony. Like people like Elon Musk are pretty much inventors. They try to revolutionize the world, and they did it. But there are people who can actually spot those top people and capitalize from it, like Warren Buffett, finding those people and back them up by using the capital. So yeah, it's always, if you can't do it, you probably have to do it in a indirectly way by backing the company using your capital. So he's doing it in a different way, I would say.
Certainly, Berkshire Hathaway is a very profitable business. It might not be as sexy as Musk's companies, but combined, they make far more money than Elon Musk's companies ever do. So that's an interesting point as well. They might not be very interesting, the areas they're in. They tend to be investing in companies that are very dominant, but they're in areas that arguably people certainly need, like transportation, for example, and insurance, but also in areas that people want, like See's candies, and Coca-Cola. So they're definitely very, very profitable business, although not trendy, shall we say.
Yeah. I think one of the advantages we're going with a company like Berkshire is highly diversified, isn't it? It's not reliant on one or even two of its companies to provide all the profits. I think majority of the companies give it good profits. The profits are quite nicely spread, so it has got a diversification. They run a kind of like a decentralized approach, don't they? They kind of like companies to run themselves. They don't get involved and try and take over companies and switch the management around. As long as they believe in the management does well, they leave it alone. So they've got a really good track record of doing that. I think they're definitely, if you're an investor that's quite cautious, you want that, you're quite happy with the 10% annual growth rate, compound annual growth rate over long term, Berkshire probably still will deliver that. And it's, even the insurance side of it alone, it's got quite a monopoly there, hasn't it now? But I think where it missed things the last 10 years, it just missed the digital world, which is dangerous, isn't it? In that all the growth we know in the future is going to come from the digital world. And if they're not involved in that, what are the returns going to be like going forward? Having said that, they did go into Apple, and they've done quite well, didn't they, with Apple's stock over the last few years. And you could argue that Apple almost turned into a typical company that Buffett could understand and like, because they built up a very profitable business, very predictable revenue streams. You can understand the products. He obviously saw everyone was using iPhones, everyone was using all their products. But you could argue, going forward, as it stands today, are Apple the most innovative tech company out of all the ones we've now got? I'm not so sure. Maybe that's the subject for another podcast. But, he doesn't really seem to look at the likes of Tesla, Amazon, these and all the upcoming kind of AI, blockchain technology, all that sort of stuff. He admits, he doesn't really like Bitcoin, does he? So yeah, I'm not sure the growth is going to be as big going forward, but it still could be a very solid company.
Yeah, I mean, he admitted it. Like even when we look at the growth forecast, the market is forecasting only 8.5% growth for long term, and you can see the market is being realistic, for the future. Because even Buffett, he admitted it. Once you get to the stage where Berkshire Hathaway gotten into is very difficult. Even if you make like 5 billion investment, it doesn't move the needle. And I think he even said it. We would like to invest 100 billion in Japan, but we couldn't do it because they can only invest smaller because of the size of the companies that they're investing in. So I think what you learn is over time, when you become a giant, it just becomes harder to generate good return for investors.
Yeah, you never really hear this put forward as an option. But why wouldn't Berkshire Hathaway break itself up into smaller companies? I mean, that to me would make more sense, because Warren Buffett himself thinks that the company is undervalued if you look at its intrinsic value. And quite often, when there are several different businesses within one business, you often find the breakup value is higher. And I think they would make more money in the future if they were a smaller series of businesses. What do you think of that, guys, as an option?
Yeah, I mean, breaking it down, I think that when they buy these companies, they leave them to manage themselves. So they are left alone. So breaking them down, it doesn't make much of the difference. But when we look at Berkshire Hathaway in terms of like its valuation, when you look at the price to earning, is trading at 13 times earning, which is not expensive. But when we look at our favorite metric, which is price to free cash flow, is trading 90 times a free cash flow. So that's expensive. And I try to go to see what the market is implying into and how much premium investors are paying. And based on the discounted cash flow is actually overvalued, because the market is implying Berkshire Hathaway would grow by 22% in the next few years, where I can see they can only grow by 8.5 moving.
Yeah, but I mean, discounted cash flow, that's another subject that's rife for debate. And again, people, I
Mhm.
agree, disagree vehemently on that, because there's too many estimates built into that model, where you use discounted cash flow to get to an intrinsic value. So
Mhm.
some great investors totally dismiss it and others
Yeah.
completely stick by it. So I just think it's one of those very debatable measures. I prefer free cash flow myself, because free cash flow can't be manipulated. Well, I don't believe it can be manipulated, unlike earnings.
Right.
This EBITDA concept, which Charlie Munger was very scathing about, because unfortunately, accountants can be very, how can I put it, creative, shall we say. And we've had some amazing accounting scandals in the past, where some huge companies have gone bust when they were showing profit year after year after year, like Enron, for example. And guess why? Because it was based on earnings, not based on cash flow. When you look at free cash flow and you look at the results, you look back at the last 5, 10 years before it went bust, the free cash flow was far, far lower than their earnings. So I'm not convinced by this discounted cash flow. I think it's theoretical. No, I'm one of the skeptics, but hey, what do I know?
One thing you made a good point, but what I have done is for Berkshire Hathaway, for example, I use it like the input would be from the free cash flow, and the free cash flow they generated over time, and I actually converted into the average in the last 10 years, how much of the free cash flow it was together in total, and divided it by the number of years I managed to get the average, so to make it more realistic. And that's based on that the conclusion is still premium. But you're
Yeah,
right.
but
I mean, yeah.
you've got to make an assumption about growth rates for the next 10 years. You can't predict the next 10 minutes what's going to happen, let alone the next 10 years. Let's be honest about it. We've got no idea. We've got no
Yeah.
idea. None of us have.
The investment game is always about probabilistically. We have to
Yes, agreed.
play
Yeah.
probabilistically what would more likely the outcome would be moving forward. I think that that's pretty much the likely outcome. They are trading at premium, and they growth is not going to be as much as they have generated in the past.
Yes. I mean, back to Carl's point earlier about if this Berkshire Hathaway would appeal to a more cautious investor. I get that, and I agree with you. I think it's for a more conservative person and someone who's not into ESG, because you couldn't invest in Berkshire Hathaway if you got an ESG conscience, and increasing that's the way of the world these days. But if you're going to do that, you might as well invest in an index tracker fund, because it'll probably cost you less in the long run.
Buffett does say.
He does say it, doesn't he? So if you don't understand, yes, it's true.
What will he tell his family to do when he dies? He said, just go and tell him to invest in S&P 500 tracker.
Yeah, I agree. Because if you don't know what you're doing, you might as well invest in index tracker fund. And let's be honest, most active fund managers underperform the index anyway. It's very difficult to beat it. You've got to be extraordinary to beat it. So it doesn't mean Berkshire Hathaway is not a good investment. We all ourselves own shares in the company, but I think that was just to qualify us to go to the Berkshire Hathaway shareholders meeting, wasn't it? We had to buy some shares.
I think it's worth mentioning about Buffett obviously stepping down, because for many years everyone's been thinking, what happens when the god, the grandfather does eventually retire, or even probably to say, pass away. Many thought it would just pass away at his desk the way he was going.
Yes.
But he obviously has announced that he's stepping down as CEO. And there was a bit of a share price hit. I mean, it did go down 5%, but not massively. So it's obviously they've tested that now in terms of, was it all just Buffett? Is everyone invested in Berkshire just because of Buffett? But no, it does look like they have stabilized and have got that succession plan quite right, because it's Greg Abel is going to be taken over. But one interesting thing with Greg Abel is he's 62. So although a lot younger than Buffett, he's not a spring chicken, is he? So, no one was quite sure how long Greg Abel is going to go on for.
Carl, a bit like me, I'm not a spring chicken then.
It's still time for you to take over Berkshire Hathaway. So he's 62. We don't know how long he's going to want to remain in a role, but he did spend $68 million of his own dollars buying more shares in Berkshire in 2022. So obviously putting forward his commitment to the company and things.
That's good.
Yeah. So, and I think a lot of the board are fairly, they're kind of that towards the later stage of their careers, but a good thing in a way in that, they've all got Buffett's probably education and way of working. So that's deep rooted into the company, but they've got the next succession plan to manage now, haven't they? How long is Greg Abel going to be there? Have they got the next sort of people lined up? But yeah, there was a little bit of a hit on the share price, about 5% went down, but it's not really caused massive waves considering Buffett's finally stepping down.
Yeah, I think even when you think about it, Berkshire Hathaway, they have 348 billion in cash. If they have to deploy that cash, I think from what I've read is they can buy up to 479 companies within the S&P 500. So if they can deploy the capital really well, they can actually generate more return in the future moving forward. As you said as well, Tony, to your point early on, if they split every business in a smaller tranche and they can deploy this capital and buy more businesses, I think they can generate a good return for investors. Just depend how they can allocate this capital moving forward.
Yeah, I think what's emerging out of this discussion today is that the biggest problem Berkshire Hathaway have going forward is one of size. Warren Buffett has admitted that himself. He said the biggest problem is the size, because you can't get the returns. Warren Buffett has said that if he managed a much smaller fund, he would make 50% a year. And I think he would. I think he really would. But this idea that Warren Buffett is the greatest investor ever, I don't agree. To me, it's a similar argument to saying Muhammad Ali was the greatest heavyweight boxer of all time. He wasn't. What he was good was self-publicity. He was an extraordinary person, Muhammad Ali, don't get me wrong. But he wasn't the greatest boxer. Let's be honest about it. Sorry, I don't want to spend too much time on boxing, but I'm just using it as an example. If you're looking at who was the greatest investor of all time, in my book, greatest fund manager of all time was Jim Simons, because he, for 30 years, his medallion fund made, 67% a year for 30 years. Dwarfs anything that Warren Buffett has ever achieved. But of course, Jim Simons wasn't as popular or likable. He wasn't a godfather type figure. He was a smoker. He could be quite ruthless, quite blunt with people, not so likable. But my goodness, the returns were just off the Richter scale, and it was all using an algorithm and using big data, which was like the forerunner to AI today. So the man was a legend and way ahead of his time, but most people have never heard of Jim Simons or Renaissance Technologies. He died about 10 years ago, I think. So I just thought I'd throw that into the pot, not because I don't like Warren Buffett, and I've said a few critical things today, but I just thought it'd be nice to just have a counter opinion for once, because people don't like to criticize him normally. I still think he's been a tremendous educator and many fantastic sayings and many things you can learn from him. There's no question about that in my book.
I think as well that you say, was it 300 billion in cash out about Berkshire's
348.
I think this thing about being big as well and having that, not being able to deploy that cash. I mean, there are multiple $trillion value companies out there, isn't there? NVIDIA's over 3 trillion, Alphabet's over 2 trillion, Microsoft. Yeah. There are companies out there it can buy that are growing very fast and have done really well. So I don't always buy it that because he's too big, he can't deploy the cash. So I think it's just because of the way they work on valuation metrics, they just can't really go for high growth digital companies because they're stuck in that model of looking for a certain type of valuation level. So
you could almost argue it's an old fashioned like frugal mindset. It doesn't make sense to have so much money in, well, you call it cash, Carl. My understanding is it's actually government stocks, US government stocks. It's not actually cash, although we call it cash. But it's a bit weak if you can't deploy that money. It doesn't make any sense. Like you say, there's many great growth companies out there, particularly in the digital world.
But also,
why wouldn't you deploy it into those?
And also, it's harder to look for companies under that traditional valuation model that they use because, as we know from the last sort of 20 years, the amount of money printing that's going on by central banks around the world, that inflates asset prices, doesn't it? So,
yes,
we're unlikely to see valuation levels consistently at what they used to be when Buffett was successful in his early days of finding those kind of companies. It just doesn't really work like that anymore.
Yeah. There's something else that's really important here is that his whole investing philosophy, like using this intrinsic value, for example, is more geared towards what I call old-fashioned companies that have got physical assets. But we're in a digital world now. How do you value these companies? Very difficult to manage them. There was this book not long ago, that we read, modern methodology of doing it. I've forgotten the name. Do you remember?
Where the Money Is,
Where the Money Is, yeah. And that was a more modern approach to valuation of these type of companies because you can't measure it the same way. You really can't. So you think you're basing it on the right model, but you're not. It's completely transformed now with digital assets. Very difficult to judge how you should be valuing it. And everything now, the real asset now is data, isn't it? We're in a data world where one who controls the most data usually controls the market. And that's why you got this Magnificent Seven.
Yeah, I think what Buffett is saying is that there's an opportunity, but the opportunity when you get to a certain stage is limited. Like, for example, if you can invest in like 500 companies, you'll probably have 10 choices of investing in maybe 10 to 5 companies rather than 500, 1,000 companies. But if you look at his holding, I actually managed to look at his, public holding, and I look at the top 10 holding, they actually make up to like 88% of his fund, pretty much.
Yeah, so quite concentrated.
When I look at the top 5, they make up 21. So he's heavily concentrated. He's running very heavily concentrated portfolio.
Yeah. Mm-hmm. Okay. I think we've covered the main things we wanted to cover today. I like to think that we've been a bit different to most commentators on Berkshire Hathaway. Would any of the three of us, invest in Berkshire Hathaway going forward if you had a choice of Berkshire Hathaway or another company? What's the consensus view? Personally, I wouldn't. It doesn't mean to say it's not a great company. It is, and it will probably continue to do relatively well. But I think there's better choices out there. How about the two of you? What would you do? Would you invest starting again with what you know now, or choose another company or companies to invest in?
I mean, it's a difficult. Personal opinion, I wouldn't, but that's because you've got a whole different outlook to risk compared to other people. What I would say is that it's still a very strong, profitable company. So like I said earlier, if you're someone that wants to kind of hug the S&P 500, potentially outperform it in some respects, it does have some defensive stocks, companies in its portfolio. So you could argue that when there are some downturns and recessions and things like that, Berkshire's companies are still going to be highly profitable because everyone always needs insurance and things like that. So from that point of view, it's still a strong, stable company. So if you are more cautious, it's definitely a company still to look at. But the bear case is I just don't think it's fit for the digital world.
Okay. Yes or no? Would you invest in a company starting from scratch now, or what you know now?
No, I mean the growth rate from here is going to be slower, so I would invest in Berkshire Hathaway at this stage. But because I do think is the opportunity from 1 trillion to double your money, they have to go to 2 trillion, and it's quite huge from here now on. So I would definitely look for other opportunities.
Sorry to interrupt. We've come to a natural end to today's show. It's been great and very interesting insights from you as usual. Remember to tell your friends about us and pass on details. Any additional materials you can follow in the show notes below. If you're listening on Apple Podcasts, please do recommend us and give us a rating. Again, encourage you to let your friends and acquaintances know about us. So all I can say is I hope you enjoyed today's show. The next one, we're going to be covering Fortinet is the next subject. Great company to invest in the cybersecurity world. So I hope you enjoyed today's show and best of luck with your investing for the future and have a great day. Bye for now.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.